it's best to know what volatility metrics are good for what strategies. And let me show you. Let's start with long options. Buying option contracts is best done when volatility is low, but rising. Perhaps when IV rank, and IV percentile are all below 50%, but with an upward bias. This allows you to spend less on the trade setup right now and potentially earn more as volatility spikes. This strategy applies to long calls and puts, which you can sell further down the line, ideally for more money than you bought them for. Of course, the risk here is that if the stock price moves against you, say you have a long call on Palantir, but the stock price goes down instead, well, that higher volatility is not going to do you any favors, as the premiums will also move down just as fast. For short option strategies like covered calls or cash secured puts, higher but falling IV usually works best. That means IV, rank, and percentile above 60 or 70%, as these trade setups have the potential for richer premiums, and the falling IV will eat away at the options values, allowing you to buy them back for cheap or let them expire worthless. And these ideal volatility scenarios extend to more complex trading strategies. For example, credit strategies like bear calls, bull puts, and short iron condors work well when IV is high and falling, while debit strategies like bear puts, bull calls, and long iron condors are better when IV is low and rising. Now, how do you find high or low volatility trades? Well, Barchart has a few quick and easy sections that you might be interested in. So let's go back to the homepage, then click Options here at the top, and you'll see these four options under volatility: IV rank and IV percentile, implied versus realized volatility, highest implied volatility, and percent change in volatility. Each of these sections allow you to find underlying assets and trades that display certain volatility traits that may fit your preferred strategy. Let me give you an example. Say you're looking to buy a call. You can start by clicking highest implied volatility here, and then going to the lowest tab at the top. Here you'll see assets with the lowest implied volatility in the market today. I also like to consider volume, as higher volume means more liquidity. So I'll click the volume column header, and the list will be arranged from highest to lowest volume trades. And there you have it. The top 5 assets are Microsoft, AGNC, Apple, Altria, and Caterpillar, all very well-known companies, and you immediately get suggested strike prices, bid and ask spreads, implied volatility, and delta values.